Bitcoin has already taken a massive dive at the start of this year, but there are a few indicators that show the dive may not be over. Today we're going to do some technical analysis and look at those indicators which show Bitcoin might not be out of trouble just yet. Let's take a look. How's it going, guys? Ryan here and welcome back to another crypto video, and today we're once again taking a look at Bitcoin and in particular some of the technical indicators that are showing that Bitcoin might not be out of the deep water yet and may be going to crash once again in 2021. But before we take a look at those, guys, remember to leave a thumbs up if you do enjoy today's video and subscribe and turn on bell notifications to keep up to date with all the latest content on the channel. We cover investing, stocks, crypto and wealth management, so if that interests you, make sure you hit the button. And as well, I'd love to know your thoughts down in the comments section below on the overall situation of Bitcoin at the moment and if you think it is not out of the deep water just yet. But without further ado, let's get straight into the video. Welcome into CoinSpot, guys. If you're looking to buy Bitcoin or any other cryptocurrencies, there's a link down in the description of this video to sign up right now. But let's take a look at Bitcoin, and as you can see, over the past few months we have continued our descent, and if we zoom out a little more, you can see that this was obviously after the massive year that we had prior. So for Bitcoin overall, we're still sitting relatively pretty in the overall scheme of things, unless you're someone who's unfortunately bought in the peaks right now. But I do not believe the decline is over yet, or in fact, let me be a bit more straight, I do not think that the indicators are showing that we are going to get out of this dip. There's not enough strength in the market just yet. First indicator is we are still not seeing huge action from a volume perspective. Whilst yes, we have not seen large drops and large dumps in volume, we're not seeing large buys. And the sellers are clearly winning because we are seeing a decline in the value. I mean, let's just chuck in place one of the, I suppose, major trends that are making us indicate, I suppose, or allowing us to interpret that the overall Bitcoin market is not safe yet. I'm going to chuck in our core support point right there. It's at 40,400 Australian dollars roughly. And we're also going to obviously as well chuck in, one moment, our trend line. And that goes in like this. And the shape we are seeing here is something which is known as a descending triangle shape. And regardless if we're looking at it from this overall perspective, or if, you know, we even narrow it down to exactly where we are now, we are seeing a descending triangle format. But I don't think this little one that's broken out here is significant because we've not seen the volume followed up. That's what I'm getting out about the volume. The buys aren't coming in. So that means this overall downtrend is still in play. A descending triangle is a continuation pattern. And given that we are currently in a downtrend, we will be continuing it based on that fact. And the reason being is we are getting lower lows and lower highs. Simple as that. What we're looking for here is obviously to see a breakout. We want to see us start moving, you know, in an upwards direction, but it's simply something we are not seeing right now, which is why this pattern is so prevalent and is playing out the way that it is. Every single time we make a new high, it does not, I suppose, exceed our previous high. So unfortunately, we are making lower highs and lower lows, and we keep dropping, and we're consolidating. We're going to get down to a point where it's going to get really tight in this area, probably by the looks of this, if we shift over in the middle of August, when this trend line continues down in that sort of a manner, around about here. Around about, I'd suggest the 16th of August is about the time we're going to see this consolidation really take its toll. And given the type of pattern we are seeing here, it's indicating that this support line is going to be broken unless we start to see the buyers really come in. But I don't think that is something we will be seeing much of at this point in time. So there you go. That really shapes it up for the time being. Furthermore, another factor, the long-term trend. Let's chuck that one in place. That, unfortunately, has been broken. It was broken right here. And that was on the 22nd of the 6th. That was why that massive dump occurred. I'm just going to line that up nicely so you can see that. Our uptrend, which we were going in overall for a very long period of time, failed. And as you can see, as soon as it failed, there was big red candles and we dropped to where our support point is currently at roughly 40,000 Australian dollars. So that's broken. That means we are in overall a downtrend. Simple as that. Let's bring in some more factors. Let's have a look at some other things that have occurred. First of all, let's bring in some moving averages. I like to bring in three. The 20-day moving average, the 50-day moving average, and the 200-day moving average. These are the key ones to keep an eye on when you are trying to work out the trend of any sort of chart, basically. Whether it's stocks, whether it's crypto, whether it's Forex, any of those sort of things, this is a key indicator. Two things occurred. First, we had our 20-day moving average cross below the 200-day. Not good. Second, we saw the 50-day cross below the 200-day. Once again, not good. We are still not seeing, due to no buying momentum clearly coming in from the volume perspective, the price being able to get back above, the 50-day moving average and therefore bring the 20-day moving average into play. The only hope that we have right now is that this, or potentially maybe down the track around here, we see a big spike in the volume of buying, and as a result, we see this 20-day moving average cross above the 50-day moving average. We need a golden cross to occur now in order for something serious to really happen. Otherwise, we'll continue downwards in this sort of direction. The key for us here, really back in the day, was obviously this death cross which occurred, but the two most recent ones are really what has got me worried now, because I've crossed through the longest term moving average, the 200-day moving average, which is not fantastic. Let's just get rid of these for the time being and let's have a look at a few more indicators right now. MACD, moving average convergence divergence. Whilst yes, we have converged and it is looking relatively good, it is not a strong convergence. The buying pressure simply is not there. As you can see, we've only got like one little candle. We need momentum like we saw back here in the middle of June, when the buying really came in and there was a chance to get out. This is when we actually peaked previously. We actually made a higher high as opposed to a lower high. So that was good news, but unfortunately we still failed and continued in a downwards direction. We need that to occur now, but the volume needs to really come into play here. Next, let's just have a quick look at the RSI. I don't think this is going to indicate too much for us, to be honest, as yeah, it's sitting relatively in the middle. It can go either way. The buying power can come in and save Bitcoin for the time being, but is it going to come in? Well, that really comes down to sentiment and the consumers who are purchasing Bitcoin. If they're not coming in, or the institutions, they do not come in, and we see a drop because there's plenty of room to still keep selling down. It's not like we're in oversold territory where we were previously when we had our initial big dump back in, April, June, May, all those sort of periods of time. It did not occur. But we're now back sort of sitting in the middle, but not really much is going on. So the selling could easily come back and destroy us basically, and we'll go straight down through that key support point. So ideally, we don't want that to happen, and there's nothing that is really showing us right now that there is any strength coming back into the market. So sentiment's going to have to be the one thing that really drives this. especially given the fact that there is no technical indicators that are really showing us that, hey, we might be about to reverse now. The amount of times we've bounced off this support line is pretty crazy over the past few months, and we've continued to, downtrend. We haven't bounced off it. We haven't had like a double, triple bottom, whatever it is, and then reversed and started moving up. No, we've unfortunately kept moving in that downwards direction. So worst case scenario, let's say Bitcoin does keep crashing and it breaks this key support point. Where are we going? Well, we got to look historically. The next level of support historically, I suppose we had a few days here. Let's just keep zooming out because it's the only way to see. We had a few days here. Maybe we have a bit of support at 32,000 Australian dollars. Doesn't look like much though. But below that point, we have another area of support, which is right about here at 26,000 Australian dollars. So that is likely where we're heading if this support line currently at 40,400 Australian dollars does not hold in place and we see a big dump of Bitcoin. So what is the target? If we really want to succeed, what do we need to do? Well, quite frankly, I think it's quite simple. We need to see that 20-day moving average cross above the 50-day moving average we saw before, and it needs to be backed up by a lot of volume, or we're going to see the price of Bitcoin just absolutely plummet. So that's the target. And then once that occurs, we need to see this downtrend currently acting as our resistance break as well. So currently, based on today, that is sitting at roughly 51,936 Australian dollars. That needs to be broken, as obviously we get to this tail end of this descending triangle, things become more precarious, but though at the same time, that means the price drops to the point where if we did have a spike in volume, it could easily get through that point. But if that does not occur, then we are in a world of trouble. If you watch the channel, you know I'm a massive fan of crypto in general, and Bitcoin is obviously one of the most important cryptocurrencies out there. But I just need to be real with you guys and show you the facts that are currently being presented on the charts. And that means if Bitcoin does crash, lots of other cryptos are going to unfortunately follow it in a downwards direction. This isn't something we haven't seen previously, but the scale of it this time, and given the sheer amount of investors, is going to really be an impactful moment. Unfortunately, not in a great way. But if you are a holder and you do believe in Bitcoin and crypto overall, of course, look back at history, look back at what's occurred before, and make a conscious decision and an educated decision on what is going to happen long term. Because overall, typically what we've seen previously is that Bitcoin has bounced back and we start getting those all-time highs and they just absolutely smash the previous. But I'm going to leave it there, guys. If you did enjoy today's video, remember to leave a thumbs up. And if you want to see more content on this channel, we cover, I said at the start of the video, crypto, investing, stocks and wealth management. Hit subscribe and turn on the bell notifications. Love to know your thoughts as well down in the comments section below. But with that, guys, I'll wrap it up. I hope you have an awesome day. I'll see you next time. Cheers.